Yo, what's poppin', man? You know what time it is. Your boy, Mr. J Hill Podcast. You know, every week I give y'all an entrepreneur that's killing in the space, that's getting money, that's gonna help you get to the bag. You know what I'm trying to say? Either get to the bag, save your money, all of that. This guy to my left just had a crazy event. It was, he had all of the top dogs there. I gotta get all of them on the podcast so y'all can get all the game. But he also is a tax strategist. He helps people save money on their taxes. And he just got it going on. So we're gonna get to know him and see how y'all can get to this bag. I got my guy Michel in the building. What up?
What's going on?
What's up, man? I said it right.
Yeah, Michel, you got
Michel,
it. Michel,
okay.
Yeah.
I was like, man, I don't want to mess it up, man.
No, it's all people always have challenges with that name because a lot of people don't know a Michel in real life.
Yeah.
So that's why I tell people call me Money Making Mitch.
Okay.
That's why I keep leaning into the paid in full, the Money Making Mitch, because our community could really relate to, you know what I'm saying, that story and that movie. It's like a cult classic. So.
Yeah. Yo, how long you been doing the tax strategy stuff?
Yeah, so I've been in the industry for over 10 years now. So I'm literally about to hit my 10th year as a CPA officially. Like I graduated college and became an accountant. That's got my master's and a CPA, and then so I've been in the industry for over 10 years now.
Wow, congratulations, bro. The event, like I said, was dope.
Yeah.
For the people, I guess before we can get into everything,
Yeah.
you were saying events like that, it's just basically for your community, like for real.
Yeah, it depends on the year I do it. So this is my 5th year doing this. So it's my 5th annual. So it started off, it's called the Paid in Full Mastermind. So like I said, it's a play on words with the album Paid in Full, and then there's a movie called Paid in Full, Money Making Mitch. So that's where, and then also it's like a triple entendre because I want people to pay in full. I want people to understand all the ways to be able to make money. So when I first did it, this was back in 2021, and I pretty much, similar to how I did it this year, I pretty much brought all the top dogs in the industry. You know what I'm saying? In their respective spaces, like people from credit to real estate to all these different types of people, to really come together, show people all these different ways to be able to get paid in full and to really create like a community and a connection. So that year, actually, there wasn't any community it wasn't part of any community. We literally, this was back in 2021. So there's a lot of, back then they were doing the packages, the stimulus packages, stuff like that. So there's a lot of money flowing around. So we were selling tickets. Literally that year, we were selling tickets for like $5,000 to be in the room, and people were paying it just like that.
Wow.
$5,000 because it was unique in the sense that because during that time, that's when people really started popping out. Not to say we didn't really have any big conferences and stuff before that, but that's the first year that Earn Your Leisure did InvestFest.
Okay.
So it was still kind of new. It was a kind of a thing, and what was a little bit different was, instead of it being a big room and you don't really see the speakers, because usually at a big event, you see the speakers and then a lot of them just go backstage. You don't really get access to them. Now they're starting to come out a little bit more, but like this was more of like an intimate space. So the first year we did it, I think it was probably like maybe 30 people in the room. So it started off in a small room. And I even said at the event this year, because Outkast, they just won an award at the Rock and Roll Hall of Fame, and Andre 3000 said great things start in small rooms. So I was like, that's exactly what it was. It started off with like 20, 30 people in the room, but it was still a lot of heavy hitters, and then people are like literally able to rub elbows and shake hands and like meet these people that they see online. So it was super dope, and then ever since then I just been building.
Yo, let's talk about that for a second. Like even the fact that you said like Andre 3000 said great things happen in small rooms.
Yeah.
Speak a little bit to that, where because a lot of people be afraid to do events because they want so many people, right? And it makes them not do it. And it's like you can, if as long as you're consistent, you can start small, bro, and give direct impact to people and give them something like real. And that's where you can build your audience for real. Like what made you, I guess, okay with the 30 people?
Yeah. So for me, it was just more about like, there's a quote that says, you know, you may have mentioned it even yesterday when you were on the stage at the event, but you don't have to be great when you start, but you got to get started to be great. So it's kind of like taking that first step. So for me, it wasn't about having the biggest room. I was more focused, and even with this, every year I do the event, I'm more focused on the experience for the people in the room, because I know it's going to be word of mouth. I know people are going to be talking about it, people are going to be sharing about it, people are going to be posting about it. So I'm not even worried about having a whole bunch of people in the room. I'm more concerned. What's more important for me is having the right people in the room.
And the value, yeah, for sure.
Because, yeah, having the right people in the room and the value that they're getting as well. And I know once I do that and focus on that, then it's just going to continue to build. And now people actually look forward to it every year. Like, people literally hit me up. Because also another thing that I did was, and it's like a tax strategy too, is I did it on my birthday. So it allowed me to be able to write off my birthday because now
Wait, yesterday was your birthday?
it wasn't. So this year
Okay.
is a little bit different.
Okay.
So usually I do it. So my birthday is in October. So I
Okay.
usually do it my birthday week. And usually if it falls on a weekday, obviously I'm going to do it on that weekend. So what I do is I host that event, but then it's my celebration because, you know, I'm in a position to where for the most part, if I want something, I could just get it. I don't really, what fulfills me the most is like being able to make an impact and seeing people excited and all those kind of things. So that fulfills me. So then when I host the event, every year is pretty much my birthday weekend. So then usually at the event, what we'll do is we'll host it and then we'll do like a birthday celebration, maybe cake, toast, whatever the case is. This year, I ended up moving it back because one, I ended up planning the event a little bit later. And then two, there's also another big event that I was actually speaking at. I'm not trying to compete with, you know, another event or whatever the case. So I ended up moving it, but it ended up working out because that weekend, it just happened to be like a really good weekend to host an event because a lot of people were in town for other events. So now it's just easy. Like people didn't have to already book. They're like, I'm already going to be in Atlanta. I'll pull up. So it worked out that way.
Wow, sheesh. Yo, let's get into this money real quick.
Sure.
So you are a CPA,
Yeah.
right? So that means you deal with a lot of people in their taxes and stuff, right?
Yep.
What's some of the mistakes that you see just starting off, like when you doing somebody's taxes?
Yeah. I think one of the big things that people mess up on is just really not really understanding taxes. And what do I mean by that? So, you know, I always tell people this all the time. People don't realize that taxes is probably one of your biggest expenses that you have. When I ask people like, what's the thing that you spend the most money on? People say my rent, my mortgage, my car note, my kids, college, student loans, all these different things. But I was like, no, it's really taxes. Because think about it. When you make money, you pay income tax. When you buy something, you pay sales tax. When you buy property, you pay property tax. When you sell the property for more than what you paid for, you pay capital gains tax. When you die, you pay death or estate tax. And you add up all those different taxes, it's like literally 51% of the money that you make. Damn. So that means like for every dollar that you make, that's 51 cents you're giving to the government. $10 is $5.10, $100, $51, $1,000, 510. We could bring it up all the way to $1 million. It's 510,000, $10 million. You're paying like $5.1 million in taxes, right, to the government. So literally like the first half of the year, you're almost like, if you don't have the right understanding and the right knowledge and information about taxes, literally for the first half of the year, you're working for the government, you're working for the IRS. So, which is crazy. But what's even more crazy than that, I was like, yes, that's a big number and that's a huge number. But what's even bigger than that is what I call ignorance tax. And ignorance tax is the tax that you pay by not understanding the tax code, not understanding, and it also relates outside of tax, just not getting the right information and being in the right room, because it's going to cost you more to not get the information. And one big thing I notice is people don't understand the tax code. There's a couple of things that people don't understand about the tax code. Number one, there's over 75,000 pages in the tax code, and only less than 5% of the tax code actually tells you what to pay in tax. 95% of the tax code tells you how to be able to legally and ethically avoid taxes.
Really?
Yeah.
Right.
There's literally one part that said, this is what's considered taxable income. You got to pay tax on this thing, that thing, but all these other things that you can do if you don't want to pay this.
Damn.
And it's actually, they realize that when you start taxing people on different things, people start moving differently. So they're like, okay, well, hey, if there's something that, like, if the government wants the people to do something, they know that they could either add tax to it or remove taxes from it. So the tax code favors business owners and entrepreneurs and investors, because they want more people to be entrepreneurs and investors, because it's a risk, right? You know, you're putting yourself out there, you're not getting a steady paycheck, so they want to encourage people to be able to take that risk. So they give them more tax breaks and tax advantages. So just that understanding you should be a business owner, entrepreneur, and investor. And it doesn't have to be crazy. When people think about business, a lot of people think about the corporations and getting the LLC and all that kind of stuff. And it's good. You want to get to that point eventually. But literally, according to the IRS, in order for you to be considered business, you have to be in the pursuit of profit, meaning that you are trying to make money.
Right.
Even if you don't make money, you're considered a business because you're in the pursuit. You're trying.
Right.
So what a big mistake is, people have a business and they're like, okay, my business didn't make any money, I'm not going to report it. Well, it's like, what? One, you should be reporting all your income and expenses, but more importantly, even if your business has if your business is losing money, that loss could be applied to your other income, and then you're able to get that money back.
Yo, look, I know you're enjoying the episode right now, but just give me a few seconds of your time so I can help you upgrade yourself and get to the bag. I have the #1 AI community on the school app for non-tech savvy users. And on this community, they're going to have 6, 7, and 8-figure AI experts teaching you how to use AI. This is way bigger than ChatGPT. Yeah, they're going to teach you how to use ChatGPT more effectively and build better prompts, but they also going to show you how to build ebooks, create websites, and chatbots. They're also going to show you how to create images, voiceovers, and music using AI. This is something that you do not want to miss out on because this is going to help you automate your business so you can get paid every single month. Yo, we got bills that come out of our bank accounts every month. Therefore, we should be getting paid automatically every single month. Do not miss out on this opportunity. I need you to download the school app right now. Search Digital Boss Code so you can start learning AI and you can build your business. But I ain't even tell you the best part about it. Yo, this is a done for you business, meaning that you can resell it to other people and you can make 50% of the revenue each and every month. Download the school app right now. Search Digital Boss Code and start making this money. There's too much money out here for us not to be getting none. Let's get back into this episode. Explain it.
So basically, let's say you have a business, and let's say you have your business showing let's say you make $1,000 in your business, right? Mm-hmm. But then maybe you spend $2,000 in your business. You're putting things on credit cards and stuff like that. So now your business has a $1,000 loss. Mm-hmm. So that's a negative number. Let's say you're working a 9 to 5, and let's say maybe you're making $50,000 in that 9 to 5, and then maybe the taxes that you owe with that 9 to 5, maybe you owe like $1,000 on that on for the year, or you have basically taxable income of $1,000. Well, now you have this 1,000 negative over here. You add it to this 1,000 positive, and it could basically zero out. Or if it's bigger, then you get a tax refund.
So is it the same thing where, like, let's say I owe taxes 1 year for my business, and then the next year, let's say I owe $10,000 in taxes for the year, right?
Yep.
But the next year I spent $10,000, or I guess I'm in a loss of $10,000.
Yeah.
Is it the same thing? Or no?
Yeah. It's when you say the same thing, it basically is
like balance out. Like
it doesn't necessarily balance out in the year, but it balances out. It can balance out, but I don't like to think about it like that because you're talking about 2 different years. Right. But if it's the same year, then it balances. Like if you have a negative on the business and a positive on like W-2 or some other income, then that's when it balances each other out. Mm-hmm. But I like to think about it year by year instead of like saying, okay, I got a loss this year and I got a profit this year, because the taxes can change depending on like what your tax bracket is that year or depending on what rules they have that year. But I would say that it does balance out in the sense that, yeah, if you have positive income over here, but you have negative income over here, as far as business, like a negative business, or if you're showing a loss on your business, and then that's when that balances out.
Okay.
And can
all right.
basically offset it was what they say.
I want to make this more personal. All right. So I was talking to somebody and I was like, yo, when did you start paying taxes? Or and it was like, man, more so just recently because, I've been making the money. Or not even just that. I had so many questions. So I want to ask you. I was like, when did you start paying yourself? Because, they always say not work in your business, but work on your business, something like that, right? Yep. But a lot of times, like, I don't have a choice. Right? Yeah. What do you mean? I can't even pay I'm going to pay myself a salary. Yeah. I barely make something. Like, the money that I'm making from my business goes to my rent. Like, you supposed to pay myself a salary. Don't work in my business, work on my business. Yeah. Like, how? Like, yeah. What is your advice to the entrepreneurs, the young entrepreneurs that just got started and they're commingling funds and things like that because they have to? Ain't no choice. Like, what do you say to that?
Yeah, so that's a really important concept. So I'm going to break down a couple of things. So there is what's called an entrepreneur and there's like a business owner. Entrepreneur is almost like someone who's just like a hustler, right? Okay. So you're the one person doing everything. When they say work on the business instead of in the business, that means you're delegating everything, right? You got systems so business owners, they use systems and people to be able to make money. Mm-hmm. Like, so you don't even have to, you literally, like, the person who owns, like, for instance, Walmart, for instance, they're not on the register. Right. They're not doing all the things within the business, but they're working on the business, being like, they have the vision, they have some ideas.
But they can afford to hire those people.
Yeah, they can afford to hire those people. So I'm starting from there. Okay. But then going down to like on someone who's just starting off. Yeah, so a couple of important concepts that you just brought up. So when you have a business, one of the things that's going to be important is for you to be able to separate your business and your personal. And there's a couple of reasons why you want to do that. One, it's going to make it easier for you to record and be able to track and document what you're doing. But then also, when you get what's called an LLC, limited liability company, that is when it's going to give you that legal protection, meaning that you're almost creating an individual person. Or it's almost like you're creating like an avatar or an individual person, and anything that happens to the business, like they can't come after your personal assets. They can't come after your house, your car, all these different things. If you have the right documentation, one of the requirements is that your business and personal is separated. So what that looks like is when you start your business, you want to get what's called an EIN, employee identification number. It's like a social security number for the business. Then you want to get an LLC. And then usually I recommend an LLC because it's the most flexible. You're able to switch how you're going to be taxed with the LLC. And then with the LLC, now you can be able to open up a business bank account. And that's how you want to be able to separate it. But then when it comes time to paying yourself, if you're just an LLC, and there's different tax entities as well. So if you're just a LLC, and let's say you're being taxed as what's called a sole proprietorship, basically that means you're just yourself, right? That in that case, you're not necessarily paying yourself a salary. You're not putting yourself on payroll in that case. You're doing what's called owner's withdrawals or owner's drawings, and you're also doing owner's contributions. So you're not being taxed on that money that's coming in and out, because it's basically like you're almost like you're pulling it from the business to the personal. So that's but then when you switch over to what's called an S corporation, that's when you're gonna officially put yourself on payroll and put yourself on salary. Based on, there's different calculations you could do it, but that's when you want to start doing it. So if you're just starting off, you can give yourself, it's almost like giving yourself, it's not necessarily a salary, but almost if you want to be like consistent and strategic, which I know is like, it's going to be difficult, especially if you're just starting off, but like you can kind of pay yourself maybe $1,000 a week or whatever makes sense for your situation or whatever the case is. But I would say early on in your business, you want to continue reinvesting into your business. You know what I'm saying? So to get it to where you're going to want to switch over to an S corporation, because when you switch over to an S corporation, then you're going to be able to avoid something called what's called self-employment tax. So when you think about like when you're working a 9 to 5, you're paying taxes and the person who owns the business paying taxes. So they split it. So 7.65% for the business owner, 7.65% for you, right? And that's like Social Security, FICA, Medicare, all that kind of stuff. Now you're a business owner, you're the employee and the employer. So now they make you pay 15.3% on the profit that you make in the business. So one of the ways to be able to reduce that or avoid that is switching over to an S corporation, because instead of having to pay that on the profit of the business, now you just pay that on the salary that you pay yourself. So let's say you make $100,000 of profit in your business, 15.3%. Now you're paying or let's keep it, I'll say $75,000 in your business. Let's say you're paying 15.3% in that. Then you are, well, let me make more. I'll keep the 100,000. So 100,000, 15.3% in the profit. Now you're paying 15,300 in taxes if you're just a sole proprietorship. If you're an S corporation, you could be able to cut that in half by maybe paying yourself $50,000 in salary, and now you're only paying 15.3% on that 50,000 instead of the whole thing. So that's that's a strategy that you could be able to use by filling out a form called 2553 to be able to make what's called an S corp election. And I usually recommend doing that when you're making more than $50,000 in profit. Yeah, that's when you want to do that.
So profit, because I talked to Carter and he was like, "Yo, once you start making like $50,000-$60,000, that's when you want to get an S corp." But you talking about profit?
But it's profit, yeah. That's a huge distinction, because you can make $50,000 in revenue, but then if you spend $50,000, then you got zero profit.
Yeah,
so
facts.
then it don't.
So I get my question still remains, okay, I can't pay myself $1,000 a week because again the money that I hypothetically, right? Let's say I bring a guest on, bring it over. I bring a guest on, right? The guest pay me, right? That probably go to my rent, right? Or let's say if I have 3 guests, right? Okay, that's gonna go to my rent, my car note. So I can't pay myself.
Yeah, but what I'm saying is that you don't need to pay yourself if you're just an LLC sole proprietorship.
Okay.
The requirement when you switch over to the S corporation, that's when you're required to do it, because they know that if you don't they know that you're going to pay less money in taxes. So like, okay, well, we know we can't touch the profit anymore. You got to pay yourself something. So we could figure out how to get this 15.3%.
Okay, so
if that person that was just starting off, no, they can. I don't want to. It's good to I'm gonna tell you the best practice, but I'm gonna tell you how it works in real
Yeah,
life,
that's
right?
that's what I
This
want.
is how it
That's
works.
what I want.
So the best practice is that to try to come up with a number that you could be consistent with, right? So you could be able to say, hey, I'm gonna pay myself $100 every week, $500 every week. The reality of it is you're using the money to reinvest in your business, and you use it when you
Take care of yourself.
when you can take care of yourself, when you got to pay the car note, when you got to get
Yeah.
groceries and stuff like that. Now remember though, for the personal things, it's not necessarily a tax deduction. So when you're pulling it out, it's still going to show as profit. So let's say you make $1,000, but then you got to pay. I'm keeping the numbers super simple. Let's say you pay $500 in your rent, which is not realistic these days, but we just
Yeah.
keeping the math simple. But $1,000, you make $1,000. Maybe do what's called an owner's draw, $500 from your business to your personal to be able to pay for that. That's not going to be a tax deduction for you. So now you're still going to show $1,000 as profit.
Sheesh.
So that's when people get caught up and have issues with taxes, because they're pulling out all this money but not setting aside money for taxes. So you got to I recommend setting aside at least 20-30%. I know I'm saying a lot.
No,
it's a lot.
So let me ask you this then. Okay. Again, but let's stick there, right?
For sure.
I'm talking about the entrepreneur that just started out, or even I didn't start out. I've been doing this full time for 2 years now, right? Like, 'cause I want to be genuine and authentic in the conversation.
For sure.
Bro, you can make $100,000, and the way the economy's set up, like
it's not
ain't nothing.
It's different.
You get what I'm saying?
Yeah.
So like, you talking about put aside 20,000, nigga. That's put aside 20,000% of. I barely can.
Yeah.
So
no, for sure.
All right, let me ask you this. Then. So,
but I'll say going to that. What I mean by that is not saying like it's not putting. You're not doing it all at once.
Yeah, every time you get paid.
Yeah, when you get paid, like because.
But I can't afford it. Is what I'm telling you. I get that $1,000. You talking about put up $200? Like,
No, for sure. No, I know you and you do. But what's gonna happen is that what can happen is if you don't have the right tax plan, if you don't have the right tax deductions, if you're not taking advantage of that stuff, then at the end of the year, they're gonna say, hey, you owe, and then you're like, well, damn, I spent it on this and spend it on that, and I said I don't got it,
right.
And then that's when people start falling behind on taxes. So one thing is like what you want to do is turn your lifestyle. I call it turn your lifestyle into a tax write-off. So figuring out ways and looking at the tax code to understand like when you're spending the money, how can I turn it into a tax write-off? Instead of saying what can I write off, you want to think about how can I write this off. So there's actually I call them tax-free requirements. So it's an acronym. So FREE. So these are the 4 requirements in order for you to write things off for your business. The first one is it needs to be considered for your business, for your trade, business, or profession, meaning that if you're in business, congratulations, you're able to write it off. Being in the pursuit of profit, you're in business. The next thing is R regular. So it needs to be considered regular for your business. Ordinary is what they call it. So one of my good friends, you probably know her, she owns an ice cream shop. So she could write off things like ice cream cones, spoons, napkins, all these different things. That's ordinary for her business. That's not ordinary for my business. It's not ordinary for your business, right? So you got to make it make sense for your business. The third part of that is essential. So what's essential for your business, the IRS calls that necessary. So necessary is going to be things like hiring legal professional services, maybe paying employees. All these different things are essential in order for you to operate your business. And last but not least, economical. That just means not lavish or extravagant. So meaning that depending on how much money you make, it may be considered lavish. If you're only making $5,000 a year and you're booking first class all the time and you're spending $5,000 on travel, that's going to be seen as lavish or extravagant possibly because you're not making that much money. Now, if you're making $1 million, then that $5,000 is nothing. So going back to that, so things that people are already spending money on. So number one, most people are living somewhere, right? So you either own a home or you're renting. If you own a home, you're able to do what's called the home office deduction, to where you're able to write off a portion of your living expenses. You can write off your utilities. You can write off your property taxes, a percentage of that based on the square footage of the home. So let's say your mortgage interest, that's going to be a tax write-off for you. So let's say, and just keep the math simple, let's say the total square footage of your house is 1,000. Okay, so 1,000 square feet. You got an office space, a place that you use specifically for business, 100 square feet. So 100 divided by 1,000, that's 10%. So let's say with all the expenses I just mentioned that you're able to write off for the home office, let's say maybe that's $1,000 a month. So 10% times 1,000, that's $100, right? That you're able to write off. But these are things that you're already spending money on.
Yeah.
So now at least instead of it showing like profit, you're actually showing that you're making less money. So that's one thing. Also vehicles, right? Many people use a vehicle. So being able to understand how to be able to write off your vehicle. So you got the standard method, you got the actual method. The actual method is when you're actually able to write off like things like gas and oil changes and maintenance and all these different things, car washes, that's a tax write-off for you. The standard method, the more simple one, is for every time you drive for business purposes, you're going to a conference, you're going to a seminar, you're going to a business meeting, shooting a podcast. That's going to be a business mile, and you're able to get 70 cents per every business mile that you drive. So let's say you do 10,000 miles in business travel when you're driving, 10,000 times, because it's 70 cents, that's a $7,000 tax deduction for you. So these are things that you're already spending money on. And then travel, I love travel, right? Travel is super dope because with travel, you can if you incorporate business and you travel for business purposes, then that's going to be a tax write-off for you, right? So one thing is, like, usually people work Monday through Friday for business, but let's say you happen to do something personal. Let's say you go to Vegas and you maybe you want to go to Vegas, maybe you're there for personal reasons or whatever the case is. One thing that you can do, or happen to be there for personal, like, I got to be careful how I word this, but happen to be there for personal reasons. But for you to turn that to a business trip, if you do something business related on Friday and do something business related on Monday, now that can be considered a business trip, right? So either where all of it's a tax write-off for you or even more. So that means like the hotels, the flights, the Ubers, the list, the Airbnbs, all that could be the meals that you eat there. Now it's considered a tax write-off for you. And if you're traveling internationally, what's super dope is that if you travel for less than 7 days, you only have to do 1 day of business. 1 day of business.
Damn.
And that whole trip is, but people, that's the thing, most people don't know that. So they'll travel and they're thinking that either they can't qualify for it because they didn't do 5 days of business. I was like, bro, you only need to do 1.
So how do I do, like, what is, like, and how do I document that, right? So
Yeah.
first of all, you're telling me that anytime I travel, I need to be traveling on a Friday, and instead of coming back on Sunday, come back Monday evening or
Yeah.
something like that,
Yeah,
right?
yeah.
And so, but after that, how do I document that I had a meeting on Friday and Monday?
For sure. Yeah. So there's different ways you can do it. So the most simplest way to do it, it's going to be very manual, but you could do it in a spreadsheet. That's one way to do it. A better way to do it is to get like an accounting software, like a QuickBooks, or there's another one called Wave, which is really popular for people who are just starting off because it's more affordable. And basically, you want to document that inside the accounting software because it's all automated. And what the good thing with those is that you can actually connect it to your business bank accounts. So every time you're spending the money, now it's showing like, hey, you just spent $1,000 on Delta. What is this for? And then you document, okay, I was going to a conference. I was going to this mastermind, and and having that documentation there. So that's how you would document it. Or another way to do it, some people, what they do is you can keep your receipts. Well, the requirement is usually you want to keep your receipts if it's more than $75. Some people actually take a picture of the receipt to help their memory, and then they email themselves the receipt. Sometimes people create an email that says like receipts at your company's name, or tax at your company's name or whatever, or you can create a folder. So there's different ways to do it, but probably the easy, more streamlined way to do it is using like something like a QuickBooks. It's gonna cost you, but they have packages that are like, some of them are like $20 if you're just starting off.
Okay.
So it's not crazy.
So, all right, what if I go to the club though? All right, I'm have my meeting on Friday. I'm planning to have my meeting on Monday. Let's say I go to the club and I pop some bottles. I can write that off too.
I'm not gonna say that. So I would say it.
Who said we can write the whole thing off? Like, the whole
well, you're
trip?
not. So yeah, yes and no. So the idea is on the weekend. Basically, what you're saying is that, okay, well, I would have left this weekend, but I got something to do on Monday.
Right?
So I gotta stay at this hotel.
Right.
I gotta eat.
Right.
I gotta.
But I don't have to drink liquor though.
You don't have to drink liquor. That's the thing.
So how is it? Is it a way?
Is there a way? So I would say if you could show it as a business meal. So if you're, and that's the dope thing.
But we're not drinking Ace of Spades to eat, like, you know what I'm saying, like that.
No, I mean, but listen, okay, so let's say you about to get me in trouble. I'm gonna give you a scenario. I'm gonna break down the tax rule and then help you think about how this can be possible for you. So one thing, and this is what I love to do, and this is why so dope. This is why I'm intentional about being friends with entrepreneurs and having, one, not only can we make money together, but then we could write off things together, right? So let's say you happen to be
we're in Vegas.
You're in Vegas, right? And maybe you have a, depending on the venue, if I would want it to be a meal that you're having, something that you are like, there's some chicken wings, possibly something that is going to be a meal for you, and if the drink of choice is an ace of spades or it's some kind of liquor or adult beverage, then yes, then that's possible. But if it's just like you're just in the club and you're popping bottles, probably the best way I could think, or the better way to do it is probably, some people try to do it, and I'm not saying this is the right way, but some people do consider that a marketing expense, because sometimes they come out with the signs with your name, at Mr. J Hill, blah blah blah, right? And then you're taking and recording it, and now that's considered a marketing expense. So that could be a way to, but I'm not saying that's the way to do it, but I'm saying that's, some people do that, and it's called it a marketing expense, because then you post on social media and you're like, I'm doing this so people could be able to know about me.
Wow.
Or the case. So that's how you do it.
Okay, I like that. I like that. All right, yo. So another question.
I'll even say this also too. So I hosted the mastermind event. I don't know if you got to see this part. I did a rooftop. It was a rooftop after party. I don't know if you got to see that part.
I was in.
Okay. You at the rooftop part. Okay, bet. So then we had a band. We had champagne, but it was part of the mastermind. So then now, you know what I'm saying? It's not like we're in the club, but it's kind of like that club experience, but it's still part of the mastermind experience and the mastermind event.
Yo, explain to me, like, when people say write it off.
Yeah.
What does that mean? Because, like, that don't mean that, okay, I spent, because people like, man, it's cool, I'll just write it off, right? Like, so I spent $1,000 on this. I don't even want to do that. That's stupid. I spent $5,000 on this camera.
Right.
Right? And people like, oh, you could just write it off. That don't mean that I get the $5,000 back.
Yeah.
Like, explain that.
That's good. Yeah. So that's an important concept, because write off, it doesn't work like that. A lot of people think so. There's a tax credit and there's a tax deduction. Tax credits actually are like dollar for dollar. So meaning that, like, there's something called like a child tax credit. So when you have kids, they give you a certain amount of money, and that, like, literally, so let's say they give you $1,000 in child tax credit. So that means $1,000 that you're gonna, let's say you owe $1,000 in taxes. That's when it could literally zero it out, because you got 1,000 and 1,000. A deduction doesn't work like that. Deduction is based on, not to use big or more technical words, but it's like a marginal benefit, meaning that you spend $1,000. Let's say it's based on your tax rate. So let's say your overall tax rate is 30%. You spend $10,000. You're really saving $3,000. So you're not getting the whole thing. It's just based on your tax rate. So you're almost spending $1 to save 30 cents is what it is. So it's not.
It's like a discount almost.
Yeah, it's like a discount a little bit. So that's the way you think of it. So it's not the whole thing, but the reason why, what I like to tell my clients, what I like to tell people is, like, if you're going to spend it anyways, then spend it. But I don't want you to go ahead and buy a G-Wagon or a car if you're not in the market for a vehicle just to get a tax write-off. You know what I'm saying? But if you're already in the market for it, then you're like, okay, bet, well, I'm also going to get you. I want you to think about it as it's an additional benefit. You feel me? So it's like you're basically getting the IRS to pay part of it for you, but they're not paying the whole thing for you. So you get the $5,000 camera. Let's say that tax rate is still 30%. That's $1,500 that you're saving in taxes, but you're not getting the whole $5,000. But at least you're getting a benefit from it.
That makes sense.
Me? So it's like, it's not. So I wouldn't want people to pop out and say, like, I'm going to just spend it because I'm going to be able to get my tax bill to zero. It's something like, I want you to be intentional. If you're already going to do it, then how can we make this a tax write-off?
Explain this again. Another one. Okay, so a lot of times, and I need to be if you podcast, just pay attention. I need to be trying to rake up on, like, advertising right now for next year, right? Because at the end of the year, I've learned that, like, more business owners are they're inclined to spend money at the end of the year, especially for the next year, because it saves them money, or like it gives them. Explain that.
Yeah. So what you can do is,
like, I can charge. My bad. Like, let's say if hypothetically, like, yo, Michel, you want to do advertising with me, right?
Yep.
We can. I can lock you in for the entire 2026, but you'll pay for it in December of 2025.
Exactly.
Explain the benefit of that.
Yeah. So most people are going to be using what's called the cash method. All right. So it's basically the cash that you spend during the year. So if I say, yo, Jay, I'm trying to lock in with you for the year, and I know to be able for us to really build together and do a collaboration on this podcast is going to be X amount of dollars. So I'm going to pay you today, and then you're basically able to write it off in the year and then be able to receive that benefit in the future if you're using the cash method, because the cash method is based on the cash that you're spending. Now, a more technical, which most entrepreneurs and business owners have to deal with this is what's called the accrual method. That's when you're gonna have to write it off in the year or the time period that you use it. But like 99% of entrepreneurs and business owners, like small business owners, are doing the cash method. So yeah, people like to prepay for expenses because they're able to get the tax write-off this year, then get the benefit from it from the following year.
Okay, so like if somebody was to lock in, let's say somebody paid me $50,000 for advertising for 2026.
Yep.
They can write that $50,000 off right now in 2025.
Yeah, if they swipe the card for it, yeah. And then and if you use a credit card and if you're making payments on it in 2026, if you're making payments on 2027, you still get the tax write-off for it. That's another benefit of like being able to like leverage and use credit too.
Oh, so do I lose in that though? The guy that's that's providing the service? Because now, yeah, you paid me today, right? In December 2026. So you get a credit for 2025.
Yeah.
But don't I still have to pay taxes on 2026 when I'm doing the job in 2020? I mean, don't I got to pay the taxes in 2025 even though I'm doing a job?
It's income for you for 2025. Yeah.
Sheesh.
So, but it's not. It's part of it's business. You made money, so now you're able to take. Now you could take that. You could turn around, take that same 50,000 and put it back into more advertising. You know what I'm saying, for your podcast? Because I know what some podcasts do is a lot of times, like if the podcast is charging, they'll take some of that money and use it to blow up the episode. You know what I'm saying? So they'll go to different blogs, and someone in the podcast space told me this is what happens. But they take some of that money, so you could take some of that money and really help build or invest more into the podcast, maybe getting a better cameras or whatever the case is. So yeah, so you can turn it around. So I don't want you to look at it like it's a win. It's not a win-lose. Y'all both $50,000. That's a win. That's a W. Even if you have to get taxed on it, but now it just gives you an opportunity to figure out, do I want to use it to be able to reinvest into the brand and the business? So I think it's a win-win for both sides.
Okay, all right. So I was asking. I mean, this is public information. I was talking to my big dog, my homie David Shans, right?
Yeah, for sure.
And I'm like, I asked him like, when you start paying taxes, because I'm being transparent. Like, I ain't got no money to pay taxes right now, right? And he's like, bro, like he was just being transparent. Like, yeah, I owe like $1 million in taxes, right? And I made my he's paying it off right now,
for sure.
But he was like, that's where he at, and I'm like, I'm looking at it like, okay, so it made me feel a little easier because I'm like, this nigga is rich, right?
Yeah, for sure.
And I'm like, okay, so I'm not like, because I was feeling bad at one point, like, man, I'm not paying taxes, like I don't have it.
Yeah.
And when I heard him like say like he just started to do it as deep in the game he in, I'm like, okay, so I do have time. Explain. I know what you gotta say. Explain. The right way, but also break it down as far as the grace that you get, or when it comes to entrepreneurs that's struggling with that.
Yeah. So basically, the IRS is a little bit. It's a business partner that you didn't agree to necessarily work. It's just the business partner that you got to deal with. So basically, what it is that if you're able to communicate and let them know, like the worst thing that you could do is what's called tax evasion, where you're just lying. You're saying, bro, I didn't make any money, or you're saying like I spent all this money, but you didn't really spend that money. So you do want to be upfront and honest about it. In the case of Shans or anyone else that owes a lot of money in taxes, yeah, owing money on taxes is, I'm not going to say it's part of the game, because there's ways you could be able to avoid paying taxes or reduce how much you end up owing in taxes. But if you end up owing in taxes, it doesn't mean that you did anything. It doesn't mean that you did something bad, unless there could have been, there's what's bad about it is either there could have been an opportunity that you could have taken advantage of if you would have known and worked with the right tax strategist to help you be able to save that money on taxes, or also like if you end up falling too far behind, because now you're gonna have to pay interest and penalties for it too. So it's actually gonna be even more money. So in the case of like anyone that owes money on taxes, understand like that's why I talk about the importance of like setting aside that money, so you're able to get caught up on it, so it doesn't end up being this big overwhelming thing. Because they'll let you pay it off over time, but like I said, you're gonna get fines and penalties. You're gonna end up paying more.
So, but again, we don't have it to set aside, right? So I'm just talking to the people
for sure.
that, so just so they can understand. I know this is just subjective, but
for sure,
a lot of times, even with like credit and stuff like that, people put aside the thing that's important for the risk that they're gonna hit the lottery.
For
right?
sure, yeah.
How often do you see that? Of course, it's not smart, but I'm just trying to have a conversation of people.
The reality is people are not doing that. But I'm saying like to be able to avoid having to owe a whole bunch of money on taxes, either you understanding like in the case of, and I know this is something that he did, I think he talked about this publicly, is that he invested in real estate. So real estate is one of the best, a really great strategy to be able to save money on taxes, because you could be able to write off a property, and it is like, let's say you get $1 million property, right? And you put like, let's say 10%, or I'm just keeping the math simple, but let's say you put down 10% on a property, $100,000, but you're still able to write off.
You can $1 million.
You could write not the whole $1 million, but you could do something called like what's called a cost segregation, meaning that they look at the property, because usually what happens is that let's say keep it 500,000. Let's say you get a property for 500,000, and the property's cost is worth 500,000. Typically, if it's a residential, you have to write off for over 27.5 years. That's how you write it off. So you get like $18,000
per year
in a deduction. But you could do something called a cost segregation, to where instead of that 18,000, you could do like 40% of that 500. So now you get a $200,000 tax deduction. So then that helps you save even more money in taxes. So that's one of the things, is like investing in real estate is going to be a big thing if you're making a whole bunch of money. So a lot of people buy like buildings in those years. That's one way to be able to save money on taxes.
So because even if I put in $100,000 for this $1 million building, I get right off the
because it's called that's beautiful. So it's one of the best tax deductions called depreciation. So depreciation is what's called a cashless deduction, meaning that you don't have to, you lose money on paper, but then you're still earning money in your pocket. So because with a loan, for instance, because you're getting basically for the $1 million property, you're getting a loan, and a loan is not taxable income. So if someone's lending you $100,000, you don't have to pay taxes on it because it's a loan, because you got to pay it back. So now you're able, even if you put down $100,000, you're still able to get about like I said, $200,000 in a tax write-off, because of what's called depreciation, meaning that you're writing it off even if you're not actually putting up that bread.
Okay, so let's break it down either further. I'm not trying to finesse, but I'm trying to help my people, right?
For sure.
Let's say I go into a joint venture.
Yep.
Right, and the down payment is $100,000, but let's say I wanted to make this easily understandable. Let's say I'm getting my part of the deal is advertising. So all I got to do is advertise. But because I got a big platform, now I can put $10,000 in, right? But it's a joint venture, so it's other people who are part of it. But the building is still $1 million, right?
Yep.
Can I still write that $200,000 off, even though I put 10,000 in and it's other people who are part of it, or is it just got to be me?
It depends on the partnership deal that you have. So depending on like the equity that you have in the partnership.
So let's say I got 1% equity. I can't.
Then you get 1% of the because basically what happens is they create a combined tax return, and then based on your percentage, that's what they're going to give you. So if it's a loss, if it's a profit, then they give you the percentage based on, like, if you're 1%, let's say it's $100, keep it super simple. Then let's say you have a $100 loss, and your equity partnership is 1%, then you're only getting like a $1 loss, or whatever the case is, based on the partnership. That's the way it's done. Now I know, are there other ways and things that people possibly do? Yeah, but being more creative, but like that's kind of like the run of the mill traditional, like best, like that's how it works.
Yo, I'm an entrepreneur that's like struggling to pay taxes. How much leniency do I have? Like how much grace am I afforded? I want the you know, the genuine, not genuine, but
the real, yeah. So,
because I know I'm supposed to, right? But let's say for the people that just they got into a bind, right? But they just started off, not the guys that's been doing it for the years.
For sure.
But they got in a bind. Like, how much grace, or when they say like you have to worry about it compared to like you be all right for now.
Yeah. So for the most part, I think it's like, first of all, most people are not getting audited. All right. So like an audit is that's when the IRS starts getting your business. Like, hey, we want to look at what you're doing.
When do they start that? At what number?
So it's not necessarily a number. So there's two ways it happens. So one is random. So it's just based on a computer, it just randomly picks people, or you're doing something that looks fishy. So one, like if you're showing, like, let's say you are showing your deductions and everything ends with a 0. Okay, so you said I spent I spent
$50, $100, $200.
I spent for the whole year. I spent $5,000 on gas. It's like exactly $5,000, bro. You
Okay.
don't mean to me something like that. 533,
Yeah.
like 58 cent. Like so, doing stuff like that's gonna throw it off. If it's off from your industry, so let's say you are you're doing. I'm trying to think about an industry that probably wouldn't do. So let's say you are maybe in an industry to where most of what you're doing is, let me think. So an industry where you're let's say you're a dentist, for instance, right? You got an office, like showing that you're doing a lot of traveling as a dentist, unless you're a traveling dentist. That's so doing things that are like really off from what is
The
normal
norm.
normal for your business, or maybe you're a trucker. So why are you taking first class trips to distant, like
Yeah.
you're driving trucks,
Yeah.
or you're so it needs to make sense of what you're doing. But then as far as you being worried about it, I would say as long as you are not trying to intentionally avoid it, meaning that if you're not lying about how much money you made, if you're not lying about how much money you spent, then they do give you grace. Like basically what happens is they're not going to kick down your door. They're not going to throw you in handcuffs. That usually happens when they know you are intentionally trying to be like really, really trying to finesse intentionally.
Okay. So,
but if it's like, okay, I just didn't know, and someone didn't tell me, or I didn't watch this podcast, I didn't get the information, and then they're probably gonna hit you and say, hey, by the way, you owe this money, and we got a couple options for you. You either pay us all the money right now, but because you're late, you're gonna get some fines and penalties, or we got payment plans for you, and you could pay this off over time, and they'll let you do that too. So you do have payment. They do give you grace. So they don't come after you. They don't jump out and come after you right away.
So avoiding, getting something in the mail saying you owe taxes and I'm not paying that, that's not avoiding taxes technically. Like avoiding it is trying to like intentionally finesse the game.
Exactly, yeah.
Okay,
yeah.
so if I'm not paying it, I mean that's still avoiding something, but
yeah.
that's not considered.
Yeah, it's just more. It's almost more so like I didn't know type of situation.
Okay.
Not. They're still going to give you fines and penalties
For sure, yeah.
Because ignorance of law is not like an excuse.
Yeah.
But they're gonna give you the letter, say, hey, bro, you owe us this money. You're behind. You have fines and penalties. And another thing, they have a process because it's based on law too. They have a process to where you could basically come back and say, no, that's not. I disagree. And now it could be like you guys can have a back and forth, right? So you could do what's called basically, that's when you get into like what's called tax resolution, to where you are saying like, hey, I actually do not owe this much money, or depending on your situation, sometimes like there's an example, actually a young lady at the event, on the Paid in Full event, she was on the tax panel, and she said her story was that she didn't know, and she ended up owing $30,000 on taxes. And then she ended up losing her job that same year. And then she was able to call the IRS and have a conversation with them. It was like, listen, I lost my job. I can't pay for this. And she was able to work out a settlement for $3,000.
Wow.
And that was done.
Wow.
So if you're able to show and demonstrate like you're in a situation where you really can't pay it, then they can, because at the end they want some money versus no money, or whatever the case is, right? So that's a really amazing, outstanding story. But for the most part, no, it's not going to be. No one's going to kick down your door. They're not going to. They're not going to. It's not going to be. They're not going to throw you and lock you in jail. It's more so like, they're going to let you know, like, hey, this is based on our calculations. This is what we think you owe, and you gotta pay us. And then also, but you don't want it to get too crazy, because what can end up happening, let's say you have this long payment plan, and then you miss the payment, you start missing a lot of payments. Then that's when they could say, you know what? Well, we own this property, by the way, because the property that you own is not really yours, it's our property. We could start taking that, doing stuff like that. But that's why you don't want to, and that's when you get in more extreme places where you're not like completely ignoring them and you're not doing anything. So that's when that kind of stuff happens.
Okay, so let me ask you this. I know I always tell people, like, I feel like people buy into the person.
Yeah.
Right? So like, I know you gotta get your clients and things like that, right? But
For sure.
if you had to give, like it was a friend, right?
Yeah.
And when we talking about hiring a CPA,
Yeah.
what's the, like you said, it's 50,000 to 60,000 profit of when you should probably get an escort. What's the number of profit where you should be like, okay, now I need to worry about a CPA? I know the answer should be like as soon as you start making money, right? But like, realistically.
Yeah,
like,
realistically, yeah. So of course I'm gonna say yesterday,
Yeah.
but more practically, if I'm talking to a friend, I would want you to have. There's different levels of ways you could work with people, right? So you can have an initial conversation with someone, maybe even pay them by the hour, just to have like an understanding. But if you are this one, I think it makes sense. So if you're making more, for sure, more than $100,000, even if you're working in W-2,
Is this profit or
this is
bring it
like
in?
this bring so out of W-2, bring it in because you're
Okay.
getting paid. But in your business, if you're making more than, even if you're getting into business, I would want you to have at least a consultation with a what I call it what we say is a tax strategist, so someone who knows how to proactively save money on taxes. So one thing I tell people is that I'm a CPA, right? Certified public accountant. In order for you to be a CPA, you have to have a bachelor's, master's. You have to work under a CPA for 2 years. A super high bar. Less than 2% of CPAs are black, so it's like it's not a common thing. So, but even as a CPA, they don't teach you how to help. They don't show you how to help people save money on taxes. They're actually just showing you more about they're teaching you a lot of things about accounting and tax, but it's not showing you how to help business owners, entrepreneurs save money on taxes. So you want to work with someone that knows how to save money on taxes, and then having a conversation initially, maybe someone may charge you $100, $200, $500 per hour, but it's going to be worth it because you're not going to have all the issues and the headaches, like not having a conversation about, bro, you need to be putting aside money for taxes. You need to understand what you could write off in your business, like all those kind of things. That's when you want to start hiring. That's when you want to at least, for me, I would say if you're a business owner, because there's so many things that they don't teach us in school for whatever reason. It's something that everyone has to deal with, but they don't teach you about business taxes. So I would say when you start a business, I think it's worth it to at least have a conversation. That don't have to be your full-time CPA where you're paying them a retainer and, doing a detailed tax plan or whatever the case is, but you want to at least get a conversation. And then when it's really, really going to make a difference is when you're making like 400,000 in your business, and that's when you're going to really, for sure, absolutely, because that's when you're pretty much at the highest. You're pretty much going to be the person paying the most taxes if you don't have like someone helping you save money on taxes. But I would say as early as possible, at least, even if you have to read a book, even if you have to maybe get a course, even if it's just like our consultation, just say, hey, this is what I got going on. Can you give me a strategy? And honestly, I'll just be transparent about this. ChatGPT is like, they give you some good information. It's not I wouldn't say it's going to help you understand everything. I wouldn't tell you to just rely on ChatGPT, but you could start the initial conversation with ChatGPT, lay out your situation, tell them how much money you make, what you're looking to do, how much money you're looking to, how much money you think you're going to make next year with, like, let's say I'm about to start a business. Yeah, I'm thinking about starting this business. I'm thinking about starting a podcast, for instance. And I want to, I think I'm probably going to make with my business plan, I think I'll probably make 50,000, 100,000 next year. What are some things that I should be thinking about? And you ask ChatGPT from a tax perspective, ChatGPT is going to start telling you something like that. So I would say I would say that's probably something really good for people to just start off. You could really use ChatGPT is getting really, really good at giving that information. But then when you start making that 100, 200, 3,000, I don't think it's worth your time trying to play with ChatGPT and be like, hey, can you, because now at that level, because when I told you that the tax code favors business owners and investors at that level, when you start making 100,000, 200, 300 plus, that's when you got money to play with. You know what I'm saying? Now you're not living in scarcity and survival. Now you got some abundance. It's like, okay, but I can go ahead and invest in real estate. I can go ahead and do invest in this business and stuff like that to help you save money on taxes. I can put money into retirement.
That's a game. That's a game. Yo, so I see again. You had the mastermind, right?
Yep.
And they were all like your mentees, or
So what's so dope about what I have going on? I've been in the industry, been in the tax industry for 10 years, but the digital space has, really blown up my business, and I've been really active and involved in the digital space for over 5 years. So with that, going back to that event we were talking about, a lot of the people in the room, I've been co-hosting these like 5-day mentorships, 5-day challenges. Sometimes it could be 3 days, to where, we give people as much value, basically we mentor people for a really cost-effective number over a couple of days. We give them information, we pour into them, we love on them, and then we give them an opportunity to be able to work with us and take things to another level. So part of that is, and I've been able to, the dope thing is, and it's public information, but I've been able to collaborate with a lot of celebrities as well too. So people have, because the thing about it is what I'm finding, and this is something that I learned early on in my career, because as my Instagram started blowing up, and because of the way I talk about the tax code too, so I feel like, especially, and I'm just be real, the way I see it, the way I feel, I was one of the first young Black entrepreneurs to make it to break down tax in a way that's relatable, and it was cool. And then other people started popping up and started like getting inspiration from that. But because I was one of the first people doing it, a lot of celebrities will hit me up and send me DMs and stuff like that. It's like, yo, I got this big following, but I'm not making money. Or I start to really see how much money I make. I'm like, you got 5 million followers and you're making this much? So what I'm finding is that they're not aware of this digital space. So I've been collaborating with a lot of celebrities and influencers, people who don't understand this digital space and sales psychology and how to create an offer and creating value for people. So I've been collaborating with them to be able to make an offer. And then part of that offer, what I like to do is that generally I like to include access to this in-person event that I host every year, to where I literally bring together, like, you know, a lot of people, the dope thing about a lot of people that I have at my event, I've been knowing for years. Like, we're like real life friends or whatever the case is. So I tell them to pull up. And then also dope people that are doing amazing things like yourself, I tell them to pull up and just give game and just pour into the people and give them value. So that's how I've been doing it. So it's been a blessing. Like I said, this year I think we had 50, 60 speakers.
Yeah, it was,
like
it was a dope event, bro.
It was crazy.
Yo,
But yeah, a lot of people in that room came from the challenge partnerships that I've done with a lot of people.
Okay, so are you still doing people taxes yourself now? Because like you,
yeah. So
high
right
level
now, yeah. So right now, my main focus is helping people with tax planning, tax strategies, and then usually what I do is I delegate tax preparation to other people to just do the tax prep, because tax prep is literally just you putting numbers into a computer, putting in software. Software does a lot of it now. So my focus is more on tax planning, but then what I do even more than tax planning is tax education. So that's really what I do is I like to speak, I like to teach, and have digital products to where I'm able to get more, not only time freedom, but also be able to impact more people with the information.
Nah, so if somebody like, I guess like was watching this and they wanted to hire you to be their tax planner,
For sure.
how would they do so?
Yep. So you could hit me up on Instagram, pretty much all social media platforms at Michel, Michel Valbrun. You can hit me up on there. And then in the link in my bio, you'll be able to, depending on when you're watching this, you'll have an opportunity. I usually have a ebook that I have on sale that you can get for something really cost effective, or if there's availability, you could book call either someone on my team, and they'll be able to, you know, get you where you need to go. And then one thing I'll do that's special, I'll actually give away my ebook for free. So usually people have to pay for it, but I can just out of love and for the community, I'll just give them this ebook. This ebook literally breaks down. If you're just starting off, you're new to business, stuff like that, you're literally gonna know 80% of the things that you need to know. Yeah. Like basically, it was a combination. It started off with a few pages, but based on all the questions people asked me, I just kept putting the answers in there, so I don't have to keep repeating myself. So it's literally all in one book, and I can just give that to them for free.
Wow, how can they do that? Like, if they gonna just
I'll tell them the link. We'll drop the link, and then they can be able to tap in that way.
I appreciate it, bro. Anything else that we probably didn't? Man, I feel like you have a lot of game.
I appreciate you.
Anything that we probably missed or?
Yeah, I would say I like to. This surprises people, but I used to growing up. I used to want to be a rapper, believe it or not. So, and I was just, because that's what we saw, either, you know, rapping or entertainment, or, you know, the street life or whatever the case is. But I gravitated towards hip hop. So I actually did a song called The 10 Tax Commandments. But I want to give that to the people real quick. So if there's a camera I can look up, I want to go ahead.
Yeah.
This one right here. Yo, so it's called The 10 Tax Commandments, based on Biggie's 10 Crack Commandments. And if you know the beat, if you know the flow, this is where it goes. All right, so check this out. I've been in the game for years. It made me an animal. There's rules to this code. I wrote me a manual, a step-by-step blueprint for you to get your game off track, the feds off your back. Rule nombre uno. Let the IRS know how much dough you hold, because you know evasion breeds penalty, especially if that prep messed up. Watch your tax go up. Number 2, document expenses you could prove. Don't you know them boys treat lying like violence? Take it from your highness. I done see mad cats and chits come for their schemes and tricks. Number 3, go form an LLC. A lawyer set that up, properly draft up. Do that and to stay up. Yup, for them big busts. They'll get that paperwork cleaned up. Word up. Number 4, I know you heard this before. Always rely on your CPA guy. Number 5, never tax prep where you rest at. I don't care if they do it free, tell them to leave. Number 6, that tax advance credit, debt it. You think they're doing you a favor, no, forget it. 7, this rule is so underrated. Keep your personal and business completely separated. Business and blood don't mix like politics with no tricks. Find your business serious risk. Number 8, know the date your taxes due. If you miss a deadline, they'll be coming for you. Number 9 should have been number 1 to me. If you start a business, stay away from hobbies. If they thinking it's a hobby, they ain't trying to listen. You be stressing in the kitchen when them letters start hitting. Number 10, a strong word, corporation, strictly for bizmen, not for freshmen. If you ain't got investors, then say hell no, because they gonna want your money rain, sleet, hell, snow. Yo, follow these rules. You have my bread to break up. If not, 24 years on the wake up. Flow hit your tempo, watch your friends shake up. Caretaker did your makeup when you pass my bad. I hope you rake up a lot of cash with beachfront in Jamaica. With the Michelin star, shut the hookers take up. Gotta go, more returns to make up. A word up, a tax king.
Nah, that was dope, bro. Like, that was hard,
you.
bro. I appreciate you, man. Michel,
For
man.
sure, yeah.
Like you said, man, if you trying to get your tax prepared, you trying to get some more information, hit my guy up, man. It was great talking to you. I appreciate it, bro.
Likewise, man.
It's a wrap, guys. Mr. J Hill, we out.
Yeah.